For the avoidance of doubt, the Simple Side does not provide investment, tax, or legal advice. As with any asset, the value of any asset class can go up or down, and there can be substantial risk that you lose your money buying, selling, holding, or investing in any asset. You should carefully consider whether trading or holding assets is suitable for you in light of your financial condition.
Politicians have been buying stocks at a 10-to-1 ratio. Does this mean that it's time to enter back into the market? Or are politicians just buying stocks because they always do? We're going to talk about that a bit today in our newsletter. thesimpleside.substack.com is where you can find everything. Let's talk about it.
Market beating picks inside. There's no jargon and no time to waste. Join the Simple Side and end up in first place.
All right, everybody, welcome back. Or if it's your first time joining us here at The Simple Side, welcome to the Saturday Send Out podcast and newsletter from The Simple Side. We're going to run through some market commentary and a bunch of interesting things about politician trades, insider trades, and weekly picks that I have for the market. Of course, those weekly trades are only available for our premium subscribers, but you can join this newsletter, get access to those weekly picks and a bunch of other incredible tools by going to thesimpleside.substack.com/subscribe. So go there, check that out, and join our premium tier to be able to access all of these incredible tools. Now, you'll know that typically I cover subscriber requests at the beginning of the newsletter every single week. And I only talk about things if they're a big deal or if I feel like they're a major change to the newsletter. I just made a bunch of minor adjustments this week, so we're not going to cover things in depth. Although I did have somebody ask me to start covering 3x leveraged ETFs. And this is just something that I don't think I'm going to do it. As much as I love to give everybody what they want to see on the newsletter, 3x leveraged ETFs are probably one of the worst products that you can buy given the risk-reward ratio that they give to an investor. A 33% drop in a stock's price, although very large, completely erases the 3x leveraged product. Completely erases it. If you're looking to trade with leverage in the market, I honestly would look at trading options over a 3x leveraged product. For one, you can limit your downside with options. You can also get higher returns with options. And a lot of times you'll be able to limit your risk or strategically use the options with your portfolio, and they can work in tandem. Whereas a 3x leveraged piece is usually just going to give you a lot more risk without the same level of returns. All right, we are going to jump into the newsletter now. And if you can't tell, I am somewhat sick today, so I'm going to do a shortened version of the typical podcast. But again, you can go read through this entire newsletter, thesimpleside.substack.com, and check out everything that I have been writing about. For those of you that don't know, we offer a copy trading for our paying subscribers. If you're a paying subscriber and you want to get access to this copy trading, you need to just send me an email and I'll send you the links to go and join our copy trading system. Also, just a reminder, we're going to be releasing a new custom website that's going to let investors track insider trades, track politician trades, track our portfolios, and all that good stuff. So be on the lookout for that coming. We're also looking at adding a Simple Side contrarian indicator for you to use in your investing journey. As another reminder, another benefit to joining our paid subscription tier is our $2,000 monthly giveaways that we do. And I say monthly, they don't happen every single month, but every once in a while we do a $2,000 giveaway. And soon we're going to be starting our next one. We're going to give away $2,000 worth of stock to paying subscribers. So be on the lookout for that. All right, like I said, this is going to be a shortened podcast. So I'm just going to run through everything, all of the sections that we cover, just a bit quicker than normal. For our portfolio returns, our flagship fund is lagging down 14% on the year. Our contrarian trades portfolio is still up quite a bit, up 34.43% on the year. Our weekly stocks are up 22.54% on the year, which means our overall returns for all of our portfolios average 14.51% year to date. This, of course, outperforming the SPY, which is down around 11% year to date. You can go and read more about our portfolios and our strategy right in this section of the newsletter. It's titled Portfolio Returns. So go and check that out there. Of course, one of the big things that I'm going to harp on is our weekly picks doing very well during a market downturn. And you can go and see how the returns have performed recently by looking at the weekly trades performance, which is right below those portfolio returns. All right, for our markets and outlook section, this is where we cover everything that's going on that we see in the markets, what we like and what we don't like. We tell you a little bit about the projected year-to-date returns, what stocks had gains, what stocks had losses, and the median return for the past week. You can go and check that out. Again, I'm feeling a little sick, so I'm going to skip over this. But there's a lot of great information in there about how I think I'm going to structure my portfolios going forward. All right, let's talk about politician trading for 2 seconds here. We covered 2 ETFs, NANC and GOP, which track Democrat and Republican trading. Over the past 30 days, we saw 16 politicians make 152 trades with a total trade volume of 2.51 million. The buy to sell ratio, like I mentioned earlier, is 10. This is triple last week's value of 3.33 and shows very bullish sentiment coming from the government, which is surprising, especially since the people up on Wall Street and in Washington probably have a great look into Trump's current plan. Again, in the newsletter, you can go and see the 5 most recent politician trades, all of which came from Marjorie Taylor Greene, and all of which were buys traded on April the 3rd. So you can go check that out there. Following the politician trading report, we've got the insider trading report. Again, you can go and see the 5 largest trades from insiders over this past week. And I highlight 2 trades every single week so that you can go and look at what some of the largest insiders or most interesting insiders are doing in the market. We covered 2 this week, one of which has an average return of 10.51% after 3 months of buying a stock. The other has an average 1-month return of 9.79%. So go and check both those guys out. Both have some interesting trades that are worth looking at depending on your time horizon and your risk tolerance. We also cover gold's performance. For those of you that don't know, gold has been crushing the market. And last week, we said it was likely going to continue to do so, keeping itself above the $3,000 range. And it did. It hit a high of $3,250, which validates exactly what we were saying last week. So this gold section, while short and to the point, is very worth it for those of you looking at finding safe haven assets during the current market downturn. Now, after you check out what you think about gold, you can go and read our weekly summary. Every week we send out a stock that we think Berkshire would buy, and we tell you why or why not we think they would buy it. This week we covered Zoetis, ticker ZTS, and we've got a quick synopsis here of why we like the stock and why we gave it a 8.9 out of 10 on our simple scoring system. So go and check that quick summary out. For those of you that don't know, this is where we get into all of the paid subscriber material for the week. And this has proven over and over and over again to be extremely valuable for those paying subscribers. For those of you that don't know, we track our performance every week, and we have been for something like 39 weeks now, 40 weeks now, something like that. We have had incredible performance. On average, over the past 38 weeks, we have outperformed the SPY by over 40% and are predicted to hit a 54% annualized return. That means we have almost averaged 1% per week. And as much as you'll hear a million gurus talking about how they can score you 1% per week returns, all you have to do is just buy their course and buy their trading and blah, blah, blah. You could say the same thing for me. Well, he's making me buy a subscription to the newsletter to see what he's doing here. Well, you can go back through every single newsletter that I have posted since I started doing these weekly picks, and you can see every stock that I've made, the returns that they've made every week. You can see when I started making adjustments to how I decided to make these trades and all that good stuff. So it's all there for you to go and look at. If you want to review and you want to test me on it, go and do it. I implore you to do so. If not, if you want to join the program, go ahead and do that now. thesimpleside.substack.com/subscribe, and you will get all of these weekly picks just like our current paying subscribers are doing. This is where I'm going to head out for this week. I am done. My voice is hurting. I don't think I can do this much longer. So enjoy the rest of the newsletter. If you're a paying subscriber, if you're a new or free subscriber, feel free to reach out to me, thesimplesidenews@gmail.com. Ask me any questions that you might have. I'll be happy to answer them. And I will see you all next week, hopefully a little less sick and more prepared to do the full podcast again. Thank you guys so much. I will see you next week.